You guys hear about the PPI? The PP?
It was the highest 0.9% on month, which is the biggest increase in 3 years, as you're saying.
Hate listening to your voice. Sorry, no offense.
We're a couple seconds away, folks, from our July release of the Producer Price Index. Headline number is whoppingly big. Oh, my goodness. Up 0.9%. Up 0.9. And if you strip out food and energy, guess what? It's still up 0.9. Boy, that equals June of 22. You're to March of 22 on the headline to find a bigger number. On the core number, that would comp to March of 22, since we've had a number of that magnitude when it was 1.2%. These are.
Is this bad? It depends. Do you want America to collapse? It's extremely bad. The PPI rose by nearly 1% in a single month. The biggest 1 month jump we've seen since the Biden inflation spike back in 2022.
Kind of COVID distorted numbers. Now, let's look at ex-food, energy, and trade. Triple the expectations. All three of those were expected to be up 0.2. This is up 0.6. 0.6 would be the highest level since March of 22 when it was 0.9. Now, let's go year over year. These are warm too. 3.7. Excuse me, I'm getting ahead of myself. Final demand year over year is 3.3. We're expecting 2.5. Now, 3.3, that would be the highest since February. The high water mark was January this year at 3.8. Now 2.8 is ex food, energy, and trade. That is definitely higher than the 2.5 expected.
He's excited about this.
Breaking just a few moments ago, key new data showing wholesale inflation heated up last month. That's a potential sign for the prices consumers may see on store shelves in the months ahead. Let's bring in CNN's Vanessa Yurkevich, who has been tracking all of this.
It's finally happening.
The headlines here, Vanessa.
Yeah, this report just out showing that the prices that businesses pay has heated up. So you're looking at a year-over-year change of 3.3%. The estimate was an acceleration to 2.9%, so obviously above that. And then on the monthly basis, the estimate, what people expected was 0.2%. That's coming in at 0.9%. Wow. So quite a bit higher than what was expected. We are seeing increases both on the goods and services side. So the products and then the services like airfares or hotels, all of those categories on the rise. And you can see that uptick just right there in the month of July, spiking up after kind of a volatile recovery after those pandemic highs. Key things to look at in goods. We saw the price of food, the price that businesses are paying for food, up 1.4%. And look at this. This is interesting. Fresh and dry fruits and vegetables, kind of a category that is interesting to look at because we import a lot of vegetables, but not from countries that are heavily tariffed. So there's something else going on, but this accounted for a quarter of the increase of all goods. This could be because of labor issues with immigration. It could be weather. It could be transportation costs, which also
is that 40% on those specific groceries in just the 1 month? Over the course of 1 month, there was a 40% increase in the average cost of those.
Rose in the month of July. And then on the services category, you saw transportation and warehousing really increasing there. Trade services, these are the margins that businesses take in. Those actually grew, and that is because maybe they're passing more of their costs down to the consumer. And then finally, in terms of travel and accommodations, on the rise again. So you're seeing hotels up 3.1%. But if you see there, look at that dramatic increase from the month of June, when we saw levels that really we haven't seen in a while, and July now indicating a huge spike. The reason we look at this report in particular, Jessica, is because ultimately businesses will have to make a decision. Do they pass this down to the consumer?
Right.
Clearly, they're paying more, and does that end up with all of us?
And what do they do? Also, the Port of Los Angeles moving more than...
You really think corporations would do that, pass costs down to the consumer? Well, for a while now, they haven't been. A majority of companies that were asked, and I've seen at least 2 surveys trying to determine this, were saying that they were taking like significant losses, not passing the cost down to the consumer, partly because they didn't want backlash from the MAGA movement, because they would have to like explain publicly why the costs were going up, and they would say, well, it's the tariffs, and they thought they would suffer political consequences for acknowledging that obvious fact, but also because they were hoping to like outlast the competition. right? If everyone in your business sector, right, has to raise their prices because of tariffs, but you get to hold off on raising your prices by 1 month, you make a bunch of new customers, right? Like if all the grocery stores except for Aldi's have to raise the costs of their produce, and Aldi's gets to hold off for 1 extra month before passing the cost down from the tariffs, a bunch of people move into Aldi's because they're like, oh, this is where the groceries are cheap. And then when the groceries end up getting more expensive anyway, people are already shopping there and they like it for their own reason, you know? A bunch of companies are doing this, but they can only do it for so long.
1 million containers in July. That's a record month. What does all that mean?
Well,
How does that
it sort of makes sense, right? Because you had a lot of businesses bringing in a lot of stuff to beat the reciprocal tariffs that were expiring on August 1st and then went into effect on August 7th. And then you were having a lot of people move a lot of stuff in from China, trying to beat those tariffs potentially going up. There's been a 90-day pause since then, but 1 million containers, more than 1 million containers, moved in the month of July at the Port of Los Angeles. That's an 8% increase from the previous year, and really trending up 5% on the year in terms of imports that they're bringing into the port. Gene Soroka, the head of the Port of Los Angeles, said, though, that he believes that the surge is behind us. He believes that surge was because people were trying to get stuff in before those tariffs rose, but likely the rest of the year will kind of resume back to normal levels. But
Genuinely, what is Trump's endgame here? Trump doesn't have an endgame. He's barely responsible for making decisions. He might vaguely like the idea of tariffs because his ancient addled mind thinks they benefit the country in some way. It doesn't really matter. I think he just likes playing the deal, man.
not surprising that we saw this increase in inflation for businesses, given that they were buying so much and bringing that in, and at a higher rate.
Right. And so, as you note, the question now is who pays? Did the consumer pay for that as well?
How much can they take on?
Right. All right. Vanessa, thank you so much. Kate?
Joining us right now for some more important context on this is the senior markets reporter at Axios, Madison Mills. Thanks for coming back in, Madison. Okay, so producer price index, an important read. How surprising is this?
It's a huge upside surprise. It's the biggest monthly upside surprise that we've had in 3 years. We were expecting a 0.2% gain. It came in at 0.9%.
It's huge. And unlike the conditions that led to the bump in inflation during Biden's term, like, this is ongoing. Like, if you price in the overall cost of the tariffs, if you price that in, assume the customers get all of the extra costs passed down to them, which is inevitably what's going to happen, we're not talking about like a temporary bump of 1 or 2 or 3 or 5 percentage points of inflation above what it'd otherwise be. We're talking about a bump of maybe like 11 to 15, you know? Potentially more, because in addition to the actual like money lost because of the tariffs, you also have economic instability, which makes it more difficult for businesses to efficiently plan for the future because they have no idea how much all this stuff is going to cost in the near future. You know, 11 to 15 is optimistic. Yeah. We're never going to have a deflationary period. You know, we might end up basically getting a Bidenflation bump. What was the total amount from Bidenflation? Year over year, like excluding the baseline 2.5%, what was the total? It was like, what was it? Like 12, 15? How much was it? 20. That's more than I remembered. 20 overall compared to today. But is that taking into account the average 2.5 year over year? Because you would expect about, 8 to 10% increase over Biden's term, even if the economy was perfectly healthy, you know? I don't think we're going to get a deflationary period, which is funny because tariffs usually do lead to deflation, but, you know.
Month over month here. And this is really critical because this goes into another data point that the Federal Reserve is keenly looking at when determining whether or not to cut interest rates. And we had the Treasury Secretary talking about a 50 basis point cut in the September meeting. A data point like this is going to make that very difficult for the Fed to justify.
Another data point that they're taking into account, and everyone has to, is so after Tuesday's not as bad as it could be consumer prices reading, add it together with this, what is the picture that it's painting? What story is this telling?
Well, it's telling a story of a market where we're going to continue to see prices going up. The CPI print that you mentioned, that's more backward looking than this data. This tells us how producers, how companies are thinking about pricing going forward. So it's more of that forward looking data, and it's painting a picture of prices going up.
consumers. But if the most recent tariffs, like the April tariff, follow the same pattern that we've seen with those earliest February tariffs, then eventually, by the fall, we estimate that consumers would bear about 2/3 of the cost.
And by the fall, we're definitely going to have some answers to that. But my question on this really is, the president, the move of like, fire your economists because I don't like their read, or I'm going to fire the head of the BLS because I don't like the July.
Oh man, I'm so looking forward to the next jobs report, the next official report of 2.2 million jobs added in Q3 from the neo-Nazi who was at J6. You know that? The new guy who's been picked, the Heritage Foundation, who's been picked to head the Bureau of Labor Statistics, was at January 6th and apparently does his interviews on Zoom in front of a painting of was it the Bismarck? Hitler's favorite warship? Phenomenal stuff, really. Yeah, the Bismarck. We are in the soup. Dude, we are so in the soup. We're so souped up right now. They really are just from 4chan. Nothing is new. Everything is just a pale imitation of the past.